The House of Morgan, An American Banking Dynasty and the Rise of Modern Finance, by Ron Chernow. Introduction. Imagine for a moment that the entire American financial system is on the verge of collapse. It's 1907. Panic has gripped Wall Street. Banks are failing, the stock market is in a free fall, and there is no Federal Reserve, no government safety net to stop the bleeding. The President of the United States, Teddy Roosevelt, is powerless. In this moment of crisis, the most powerful men in America, the heads of the biggest banks and corporations, don't gather at the White House. They gather at the private library of one man. A 70-year-old banker with a fiercely piercing gaze and a grotesquely swollen nose. A man who single-handedly holds the nation's trust. For hours, he locks them in his magnificent library, surrounded by priceless Renaissance art and ancient manuscripts. He refuses to let them leave until they pledge millions of their own fortunes to save the system. He barks orders, shuffles them from room to room, and drafts a plan on a single sheet of paper that will either save America or watch it burn. That man was J. Pierpont Morgan. And that night in his library was the peak of a power so absolute that it's almost impossible for us to comprehend today. It was the power of a private citizen acting as a central bank, a president, and a king, all rolled into one. How did one family, one name, come to wield such incredible influence over the destiny of nations, and what happened to that world? That is the epic story at the heart of Ron Chernow's masterpiece, The House of Morgan. This isn't just a book about banking, it's a breathtaking saga of ambition, power, and the secret history of modern finance. Chernow is a master storyteller, and he turns what could be a dry subject into a drama filled with larger-than-life characters, epic triumphs, and devastating tragedies. The book won the National Book Award for a reason. It reads like a great novel, yet every word of it is true. Over the next hour, I'm going to share with you the core lessons from this incredible book. My promise to you is this: by the time we're done, you will understand not just the story of a banking dynasty, but the very DNA of the financial world we live in today. You will see how the battles fought over 100 years ago still shape the headlines you read this morning. This is the story of how money became modern, and how a handful of men, for better and for worse, built the world we now inhabit. Book summary. The story of the House of Morgan isn't just about one bank. It's about an empire with outposts in New York, London, and Paris. And it's a story that Ron Chernow brilliantly divides into three distinct eras, each with its own character and its own kind of power. He calls them the baronial age, the diplomatic age, and the casino age. It all begins not with a Morgan, but with a man who was his complete opposite. A man named George Peabody. Our story starts in London in the 1830s. London was the undisputed center of the financial universe. The British Empire was at its peak, and British pounds were the currency that financed the world. America, at the time, was seen as a wild, undisciplined backwater, a risky place for European investors. And for good reason. Several American states were on the verge of defaulting on their debts. They were seen as unreliable, rustic swindlers. Into this world steps George Peabody, a tall, homely American merchant from Massachusetts. He was born into poverty, and the scars of his early struggles never left him. He was a notorious miser. There's a famous story of his partner, Junius Morgan, finding him one day standing in the London rain, looking sick. Morgan urged him to go home. A little later, Morgan saw Peabody still standing in the same spot. "Mr. Peabody," he asked, "I thought you were going home." Peabody replied, "Well, I am. But there's only been a twopenny bus come along as yet, and I am waiting for a penny one." At the time, Peabody was already a millionaire. But this penny-pinching man had a grand vision. He established a merchant bank in London in 1838 with a clear purpose: it would be an American house. He wanted to build a bridge of trust between the capital-rich world of London and the resource-rich but cash-poor United States. He single-handedly worked to repair America's reputation, even paying a state's debt out of his own pocket to prove that not all Americans were cheats. Peabody was a lifelong bachelor, and as he grew old, he needed an heir. He didn't have a son to pass the business to. So he had to choose a stranger. His choice fell upon a man named Junius Spencer Morgan, a dignified, steady, and respected Boston merchant. In 1854, Junius became his partner. Junius was the true patriarch of the Morgan clan. He was the one who codified the Morgan philosophy that would guide the family for a century. He was calm, disciplined, and believed in absolute integrity. Where Peabody was an eccentric miser, Junius was the model of a respectable Victorian banker. He believed in doing first-class business in a first-class way. This partnership between Peabody and Junius Morgan laid the foundation for everything that was to come. But the real story, the one that would define an era, begins with Junius's son. A young man who was nothing like his steady, predictable father. A young man with fire in his eyes and an ambition that would dwarf all who came before him. His name was John Pierpont Morgan. This begins what Chernow calls the baronial age, an era from the end of the Civil War to the early 1900s, where bankers were not just financiers, they were the lords of creation. After the Civil War, America exploded with industrial energy. Railroads were stretching across the continent, steel mills were rising from the ground, and new industries were being born. But this growth was chaotic, brutal, and often corrupt. It was an age of robber barons, men like Jay Gould and Jim Fisk, who treated corporations as their personal playthings, bribing legislators, manipulating stocks, and fighting their battles with hired thugs. Into this wild west of American capitalism stepped Pierpont Morgan. He was a force of nature. A big burly man with a barrel chest and piercing fiery eyes. His most famous feature was his nose, which was horribly deformed by a skin disease called acne rosacea. It was swollen, purple, and lumpy. He was intensely self-conscious about it, and his gruff, intimidating manner was, in part, a defense mechanism to keep people from staring. When he fixed his gaze on you, it was said you felt like a specimen under a microscope. Morgan saw the chaos of American industry, and it offended his sense of order. He believed, with an almost religious fervor, that competition was wasteful and destructive. His life's mission was to bring order to this chaos. He didn't just want to finance companies, he wanted to control them, to force them into stable, profitable combinations. He did this through a process that came to be known as Morganization. When two railroads were tearing each other apart in a rate war, driving both toward bankruptcy, Morgan would step in. He would summon the railroad presidents to his library at 219 Madison Avenue ? A dark, imposing room filled with rare books and art. He famously locked them in until they agreed to stop competing. He would reorganize their finances, slash their debt, and, most importantly, place his own men on their boards of directors. In return for his capital, he demanded control. A company financed by Morgan became a Morgan Road or a Morgan Company. He was their banker, their priest, and their king. His word was law. This crusade for order culminated in 1901 with his most audacious creation, United States Steel. Andrew Carnegie, the brilliant and ruthless steel titan, was threatening to wage a price war that would devastate the entire industry. To stop him, Morgan decided to buy him out. After a quiet negotiation, Morgan agreed to pay Carnegie nearly $500 million, an almost unimaginable sum at the time, making Carnegie the richest man in the world. Morgan then combined Carnegie Steel with his other steel holdings to create U.S. Steel, the world's first billion-dollar corporation. It controlled over 60% of the nation's steel production. Pierpont Morgan wasn't just creating a company, he was creating a system. He was replacing the chaos of competition with the stability of monopoly. To his admirers, he was a visionary who was building a modern, efficient America. To his critics, he was a tyrant, the head of a money trust that was strangling competition and concentrating all economic power in the hands of a few Wall Street bankers. The peak of Morgan's power, the moment that defined the baronial age, came during the Panic of 1907. As we saw at the beginning, with the financial system in freefall, Morgan became the de facto central bank of the United States. He summoned the presidents of the major banks to his library and told them they had to create a pool of money to support the weaker institutions. When they hesitated, he locked the doors. "There is the place to sign," he reportedly said, pointing to a document, "and here is the pen." They signed. For 2 weeks, he worked almost non-stop, directing capital, saving banks, rescuing the New York Stock Exchange from collapse, and even bailing out New York City. He was, for a brief, terrifying moment, the absolute master of American finance. But this incredible display of private power also marked its end. The country was stunned and frightened that one man could hold so much influence. The Panic of 1907 led directly to the creation of the Federal Reserve System in 1913. The government was finally stepping in to do the job that Pierpont Morgan had been forced to do himself. Pierpont Morgan died in 1913, just as the Federal Reserve was being born. He was a titan, a figure of almost mythical proportions. He was a man of profound contradictions, a devout Episcopalian who was also a notorious womanizer, a patron of the arts who collected priceless treasures with one hand while crushing competitors with the other. He embodied the raw, untamed energy of the Gilded Age. With his death, the baronial age of the all-powerful individual banker came to a close. The empire now passed to his son, J. P. Morgan, Jr., known to everyone as Jack. This ushers in Chernow's second era, the diplomatic age, lasting roughly from World War I to the end of World War II. If Pierpont was a king, Jack was a constitutional monarch. The power was still immense, but it was quieter, more refined, and exercised in close partnership with governments. Jack Morgan was the complete opposite of his father. Where Pierpont was explosive and domineering, Jack was shy, gentle, and deeply Anglophile. He loved England, spent much of his time there, and saw himself as an English country gentleman who happened to work on Wall Street. He lived in his father's massive shadow and was plagued by insecurities. He once said, "If I have been able to succeed, I attribute it more than anything to the endorsement of my father's friends." But the world had changed, and the nature of banking power had changed with it. The First World War was the event that transformed the House of Morgan from a dominant American bank into a global power of the first rank. When the war broke out in 1914, America was officially neutral. But the sympathies of the Morgan partners were entirely with Britain and France. For them, it was a battle to save civilization. The Allies desperately needed to buy supplies in America, food, ammunition, raw materials, but they were running out of money. The Morgan Bank stepped into the breach. In one of the most astonishing arrangements in financial history, the British government appointed J.P. Morgan & Company as its exclusive purchasing agent in the United States. The bank essentially became the supply department for the Allied war effort. From its offices at 23 Wall Street (the famous corner), the bank organized a massive logistical operation. It financed and coordinated the purchase of over $3 billion worth of goods for the Allies. That's the equivalent of over $70 billion today. The bank was negotiating contracts for everything from wheat to locomotives to horses. It was acting as a shadow government, wielding economic power on a scale that dwarfed its pre-war activities. This role made the bank a fortune. It earned a 1% commission on all purchases, but it also made it a target. To German Americans and isolationists, the House of Morgan was seen as a cabal of merchants of death, dragging America into a European war simply to protect its loans. In July 1915, a German sympathizer walked into Jack Morgan's Long Island estate and shot him twice in the groin. Jack survived, but the attack only hardened his resolve to support the Allies. When America finally entered the war in 1917, the Morgan Bank became the primary channel for government financing. The diplomatic age was now in full swing. The Morgan partners, especially the brilliant and charming Thomas Lamont, became unofficial ambassadors. They sat at the peace conference at Versailles, advised presidents and prime ministers, and negotiated massive reconstruction loans for Europe. They saw themselves as financial statesmen, working to restore order and stability to a shattered world. Lamont, in particular, was a true believer in Woodrow Wilson's vision of a League of Nations. He believed that international cooperation, guided by enlightened bankers, could prevent future wars. This idealism, however, had a darker side. As the bank became entangled with foreign governments, it sometimes became an apologist for their actions. In the 1920s, Lamont became a prominent supporter of Benito Mussolini's fascist regime in Italy. He saw Mussolini as a strong leader who had saved Italy from communism and made the trains run on time. He helped arrange a massive loan for the regime and even advised Mussolini on how to improve his public relations in America. It was a classic case of relationship banking, where loyalty to a client blurred the lines of political and moral judgment. The Roaring Twenties were a golden time for the House of Morgan. It was the most prestigious bank in the world, the gatekeeper to American capital. But the speculative fever that was gripping the country was something the conservative Morgan partners viewed with deep unease. Then came the crash of 1929. Just as his father had done in 1907, the bankers of Wall Street gathered at 23 Wall Street on Black Thursday. This time, the meeting was led by Thomas Lamont. They organized a pool of money to support the market, but it was like trying to stop a tidal wave with a bucket. The power of the market had grown far beyond the control of any small group of men. The era of the private rescue was over. The Great Depression that followed brought a storm of public fury down on Wall Street. The bankers who had been heroes in the 1920s were now seen as villains. This anger culminated in a series of sensational Senate hearings in 1933, led by a fiery prosecutor named Ferdinand Pecora. The Pecora hearings put the House of Morgan on trial. Jack Morgan, now a weary, white-haired man of 66, was called to Washington to testify. He was grilled about the bank's secret operations, its preferred lists of influential friends who were offered stock at bargain prices, and its immense power. The most famous moment of the hearings, however, had nothing to do with finance. As Jack sat at the witness table, a press agent for the Ringling Brothers Circus, in a publicity stunt, suddenly placed a female midget named Leah Groff on his lap. The flashbulbs popped, and the next day, the image of the world's most powerful banker with a circus performer on his knee was splashed across every newspaper in America. The photo humanized Jack, but it also symbolized the end of the bank's imperial dignity. The mystique was shattered. The hearings led directly to the most sweeping reform in American banking history, the Glass-Steagall Act of 1933. The law built a high wall between two types of banking. Commercial banking, taking deposits and making loans, was to be separated from investment banking, underwriting stocks and bonds. The theory was that the speculative risks of investment banking should never again be allowed to threaten the savings of ordinary depositors. For the House of Morgan, which had always done both, this was a death sentence. The firm was forced to choose. It had 1 year to decide which business it would keep. It was the end of an era. The great unified House of Morgan was to be broken in two. After much agonizing, the partners made their choice. They would remain a commercial bank, J.P. Morgan & Co., and spin off their investment banking business into a new firm. On September 16, 1935, a new name appeared on Wall Street, Morgan Stanley. It was staffed by Jack Morgan's younger son, Harry, and some of the brightest partners from the old firm. The diplomatic age was over, and the great empire had been cracked in two. This brings us to Chernow's final era, the casino age, which spans from the end of World War II to the late 1980s. This is the world of modern Wall Street, a world that would have been unrecognizable to Pierpont Morgan. In this new age, the balance of power shifted dramatically. The bankers were no longer the masters. Their clients, the giant multinational corporations like GM and Exxon, were now far larger and more powerful than the banks themselves. These companies no longer needed a single, powerful banker to vouch for them. They could raise money anywhere in the world, from a growing number of competitors. The old gentleman banker's code of exclusive relationships and polite, non-competitive behavior began to crumble. Banks had to hustle for business. J.P. Morgan & Co., which merged with the Guarantee Trust in 1959 to become Morgan Guarantee, remained a prestigious commercial bank, the home of old money and corporate aristocracy. But it was a smaller, quieter player in a much larger game. Morgan Stanley, on the other hand, inherited the mantle of the premier investment bank. For decades, it was the white shoe firm, the most elite underwriter on Wall Street, still clinging to the old traditions of serving its blue-chip clients with quiet dignity. But the world was changing too fast. The 1970s and 80s brought a new, aggressive style of finance. This was the age of the hostile takeover, the leveraged buyout, and the junk bond. The old, clubby world of Wall Street was being replaced by a ruthless, anonymous global marketplace, a giant casino. The old Morgan houses were forced to adapt or die. Morgan Grenfell in London, which had become a sleepy, aristocratic firm, transformed itself into the most aggressive takeover specialist in the city. It became the gentleman pirate, using its prestige to push the boundaries of acceptable behavior, a path that led directly to the infamous Guinness scandal in the 1980s. Morgan Stanley experienced an even more dramatic transformation. Led by a new generation of partners who saw that the old ways were no longer profitable, the firm made a historic decision in 1974. For the first time, it represented a client in a hostile takeover. It was a shocking break with tradition. The firm that had once symbolized stability was now an agent of disruption. This move opened the floodgates. The Manda Department, led by a brilliant and aggressive banker named Bob Greenhill, became the firm's new engine of profit. Morgan Stanley became a master of the takeover game, advising on some of the biggest and most brutal corporate battles of the era. It also plunged into the risky world of junk bonds and leveraged buyouts, financing the very deals that were dismantling the stable corporate America its founders had helped to build. By the 1980s, the three Morgan houses, once part of a unified empire, were now fierce competitors. The family feeling was gone, replaced by rivalry. They were all playing the same game in the global casino, and the old Morgan name was now just one brand among many. The story culminates in the late 1980s. Morgan Grenfell, wounded by scandal, is sold to Deutsche Bank, ending its independence after 150 years. Morgan Guarantee, realizing that traditional lending is a dying business, aggressively moves into investment banking, setting itself on a collision course with its old sibling. And Morgan Stanley, having fully embraced the new age, becomes one of the most powerful and profitable, and feared, firms on Wall Street. The House of Morgan, as a single, all-powerful entity, no longer exists. Chernow's thesis is that it never will again. The world has become too complex, capital too widespread, and power too dispersed for any one bank or one family to dominate finance in the way the Morgans once did. The story is a powerful reminder that in the world of money, nothing is permanent. The old order is always giving way to the new, and the traditions that seem sacred in one generation are often shattered by the next. Commentary. As you listen to this story, stretching over 150 years, it's easy to get lost in the epic scale of it all, the wars, the panics, the billions of dollars. But I think the real power of Ron Chernow's book lies in the human drama and the timeless lessons it holds about power, character, and the world of money. What I find most fascinating is how the book traces the evolution of power itself. In the baronial age, power was personal. It resided in one man, J. Pierpont Morgan. His character, his integrity, or at least the perception of it, was the bedrock of the financial system. When he gave his word, it was better than any contract. That's an incredible concept. A man's personal reputation was the currency of the realm. Then, in the diplomatic age, power became institutional. It wasn't just about one man anymore, it was about the institution of the House of Morgan. The name itself carried the weight. The partners, like Tom Lamont, were brilliant, but they were acting as representatives of the firm and, by extension, of their governments. Power became more about access, connections, and influence within established structures. And finally, in the casino age, power became impersonal. It shifted to the markets. It didn't matter who you were or what your name was. What mattered was your access to capital, your speed, your trading prowess, and your willingness to take risks. The individual and the institution were both dwarfed by the massive, anonymous force of the global marketplace. This progression tells us something profound about the world we live in. We often look for a single person or a small group to blame when things go wrong in the economy, just as people blamed the money trust a century ago. But Chernow shows us that the real power often lies in the systems themselves, the rules of the game, the flow of capital, and the technological forces that are constantly reshaping our world. So, what can you, as a young person just starting to think about your future, take away from this grand historical saga? First, understand that history is not just a collection of old stories, it's a map of the present. The battles over debt, trade, and the role of government that were fought in Pierpont Morgan's day are still being fought today, just in a different form. Understanding these patterns gives you a powerful lens through which to view the world. It protects you from the illusion that what is happening right now is entirely new. Second, consider the idea of character as capital. Pierpont Morgan's most famous quote from the Pujo hearings was when he was asked if credit was based on money or property. He replied, "No, sir. The first thing is character. A man I do not trust could not get money from me on all the bonds in Christendom." In an age that often seems to reward flashiness and quick profits, it's a powerful reminder that trust and reputation, built slowly over time, are the most valuable assets you can ever possess. They are the foundation of real, lasting success. Even as the Morgan Bank's methods became controversial, its reputation for integrity was the one thing its rivals could never replicate. And finally, think about the difference between creating value and simply shuffling assets. The early House of Morgan financed the railroads, steel mills, and electrical grids that built modern America. They were creating something new. In the later casino age, much of finance became about takeovers and leveraged buyouts, shuffling the ownership of existing assets, often loading them with debt, and extracting fees in the process. Ask yourself, in your own career and in the businesses you admire, are you building something, or are you just playing the game? Are you creating long-term value, or are you just chasing short-term profits? The House of Morgan is a monumental work, and what we've talked about today is just a glimpse into its riches. We've hit the highlights, But I'll be honest with you, a summary can only ever be a signpost, pointing you toward a destination. The real journey happens when you walk the path yourself. The true power of this book is in the details, the incredible stories, and Chernow's masterful prose. It's in the quiet moments of reading when you feel like you are in the room with these financial giants, watching history unfold. This summary is designed to help you decide if this book deserves a place on your shelf. If anything we've explored today has sparked your curiosity about the secret world of money and power, I urge you to grab a copy. Reading it isn't just an education, it's an experience that will fundamentally change how you see the economic world around you. You can find a link to the book in the description below. Also, if you found this summary valuable, please take a moment to hit that subscribe button. It tells us that these deep dives into big ideas are what you want more of, and it ensures you won't miss our next journey into another life-changing book from the billionaire's bookshelf. Let's keep learning and growing together.